All right, we're going to take you on a little history lesson before any of us was alive, before anybody alive that knew anything about trading at all. It's impossible that they would be alive, okay? We're going to go that far back. So, simple understanding. 125, 250, 375 fractal sequences from the year 0 to the year 2000. 125-year bars, 250-year bars, and 375-year bars, okay? The opening, when the year 2000 closes, right? That's when we start our new sequence of 2001 up, okay? Of what you've seen me doing with monthly, weekly, and some daily bar stuff. So what we're going to focus on here is the 125-year bar sequence, and 125 divides evenly into the whole of 2016 times. So that means when 2000 closes, one of these 125-year bars have closed. And 2001 is the open of a 125-year bar. It's an even divide, so it's the start at 2000. And here is another one that's the 250 year. It evenly divides into 2000. There's 8 of them. Okay, but the 375 does not divide evenly at the year 2000, but it does in the year 1875. Okay, nobody was around then, was it? Not anybody around today. So I'm willing to bet that if I can prove my system to you on this type of setup from 1875 to current, if I can't win you over, I don't really know what will. So 1875 years, the 125 divides into that evenly for 15 of them. 1875 divided by 375 divides evenly, and the 250 does not. So this is the start of a 250 and a 125, and this is the start of a 125 and a 375, okay? So that's the start of the sequence. And the people that are going to click off this video, I'm sure you're already ready to get out of here, so go ahead and click off so you don't get any useful information that make you want to stay. Y'all don't pay no attention anyway. All right. What are my rules? 2 bars back, odds and evens, each mathematical perspective, okay? So what do we have in a major here? Off of the open of the year 1875. 1875. Open. The third 25-year block, boom, right off of the close. Huh? You just want to make sure you see it there. Do you see that? Bang, took off. A perfect mathematical sequence. Also, there's a lower closing level in this bar 2 right here. And it also hits that in the bar 2. So like kind numbers, odds, and evens, 2 bars back, okay? Okay, this level here, when this level comes in, it's this closing level marked over to this bar. This bar closed, we're in the new bar. We are under 2 bars back, high and closed. We dump back down. It comes down here. What do we have at the bottom? So this is bar 1, bar 2, bar 3, bar 4. Okay, so this is bar 2. Look at bar 4. Bounce off of bar 2. Come on now. 1895. Come on now. I've got a move popping off right here in 1885 and showing that it's popping off in the 1890s from these levels. Okay, I wasn't alive. You weren't alive. None of today's gurus are alive. Yet none of today's gurus have shown you a system like this and given you such consistency and the simple understanding without all the BS that's not connected. Okay, I'm showing you fractal sequences. All right, so what do we have up here? Again, let's take this bar right there. We are in the new bar, right? So we are bar 1, bar 2, bar 3. So bar 4, this is the open. It closes, bang, it hits up here in the high closing bar of bar 2. Boom, dumps down. You see what I'm saying? Comes down. What's it bounce off of? 5 bounces off the open. This close over into this level is the open bar of my 5 bar sequence. Bar 5 off bar 1, bang, it goes up. It takes off. What does it do? It comes up here in yearly bars. 2 bars back. 1, 2, right there. That's 5 off of 3. It rejects. 5 off 3. It's an odd sequence. It shoots us down. We hit 3, third bar on the 1, open from over here. 3 off 1, odds and evens, 2 bars back. Wow, isn't that pretty cool? Pretty cool. So now we are at the bottom here. It comes up, dumps back down. What do we have right here? We have structural levels, which I've talked about and shown in my other videos. You can trade the structure of the 2 bars back. That was my swing failure low. Brought it over. Bar 4 off of the structure of bar 2. That right there is a long signal. Okay, and so here we go. We are down here. We go up. What do we do? In this bar right here, it shorts. We are bar 5 from here to here. Bar 5. Over here, we are bar 3. See, 1, 2, 3. We are 3. Open of 5. Bang. Rejects. Comes back down. 5 lands on structures of the 3. Okay. And at that level, you also have bar 1, bar 2, bar 3, bar 4. Long signal. 2 bars back. Inside of our bar 5 at our bar 3. Boom. We are parabolic. I mean, pretty parabolic, right? So you've got those are some smaller levels and stuff. We can change over in just a second. I was just trying to give you guys a understanding. This right here, this bar 2, boom, boom, in the range of bar 4 and takes off. Here we are here. These are just, I'm going over the larger time frame perspectives first. It's kind of getting us through it a little quicker. So bar 5 over here off this level, but it came down here towards the open. If I can get my selector on there, and then drag that over, it came down towards that, and then that's what it did. We are in this bar. This is the 1, 2, 3, 4. This is the open of the 4th. In this bar over here, it landed on the 4th. 5 off of 4, but it was still the same type of odds and even sequences. It matched like that right there. We've got, let's see, let's go down here and break it down a little bit better, and then I'll get into the 250 and 375 sequences. Let's go down to, now this will be times whenever they didn't have a lot of data, and so what is happening is that, you know, it's they've got a lot of data collected and they put it in, and that's what built this entire chart, and that's why some of it's spotty, and then you see it kind of working and coming in. But you can see even with this low amount of data, all these gaps, it still did the same system. 4 off of 2, boom, right up, and then 3 under 1, 1, 2, 3, the open of 1, boom, dumps, right? This is also, that's the opening level of it where the gapped up, and this right here is where it came in at. But those are your levels there. All right. Let's see, what do? We went down, just did some previous stuff here, smaller maths. Sure it would have came into a 2 bar back down in there somehow. But up in here, even with the gaps, you've went bar 1, put in a high, bar 2 came up and went outside of that high, and then 2 bars back, even with the gaps, it went down like that. And then it comes over here. This little level here is hit from over here. This is 1890, right? And then we've got the short level from 2 bars back. Boom, comes down. We're over here. We come back inside of 2 bars back at the larger 2 bar back signal. Goes up. Bar 3 here off of bar 1. Boom, it's gone again. It's moving, right? Here you are, 2 bars back, low data. We are bar 2 again outside of bar 1, pulls back inside within 2 bar back setups with the missing data. It comes down, bounces up, 1 bar, 2 bars, boom, it's long. We've got this bar here coming in. This is the high of my previous bar here. When it comes into that point, it gives it a short signal. This is 5. This will be 6. This will be 7. Or, 1 and 2, or, rejecting 4 here. 1, 2, 3, 4, or 5 here. So 5, 6, 7, 7 rejecting 1. I'm sorry. I was looking at it wrong. Anyway, now we've basically tagged the previous 5-year period of low here, went back up, hit the high up, came down, and then we've got a high right here, a little range back over here, these little areas here from 2 bars back, where it comes up in there. Even though it's low data, it still gives you the understanding of the levels that you would be failing through right there, coming down, going back up, hitting the previous red line there. All right, this is bar 1 off of bar 5 open. So there's like kind numbers, odds and evens there. Bar 1, bar 5, 2 bars back. Boom. Comes down. We're talking 1917, right? Come on now. So we have an attempt to come back up over in here towards this 2 bar back level here. And it drops back down, gaps back down really far, continues down. And then we get a lot of spotty information here. But basically, we're here breaking out of 2 bars back. And then we start getting up in here and we start having more data. So we can just kind of go quicker from here. I don't have it all broken down, but again, this would be broken up to this point here. And then we've got this bar, 2 bars back, jumping down. The data is starting to crunch in until we, the time isn't all there in this period, and that's why we're missing some of it and why the bars look a little funky like that. But yeah, that's pretty much how it goes sometimes. And so again, just to clear this up real quick, just to show that there's massive amounts of data missing here. This is a 25-year period, another 25-year period, and then this from 26 open until the close of 1950. That's the next 25-year bar. But look at all the data that's in there, right? And so look at how I just showed you my system working through tons of missing data over a 50-year period. You understand? Because we are accounting for what data the chart has to give us in these perspectives. And that is all the data it had. And that it is forced to work inside of this mathematical set of fractals that I've developed and I'm showing you guys. Okay, so that's what you need to understand. This is so accurate that if this is a 25-year period, then I'd be looking at 2 of those for 50 years of data. But with that much missing, it's still perfectly accurate, except for all the gaps and stuff. And that's because they couldn't find all the information to get this in here and stuff. But it still shows how whenever you enter the system into an accounting database, you can account for it. It doesn't matter what it is. It's values based off accountable values. Okay. All right. And so now we're over here in the 25-year bar. And this, I showed you this where it was kind of going off of bar 3 structures and then 2 bars back. It did it off 2 bars back there, and then 2 bars back again and got moving. Here we are again. These levels, the structures from 2 bars back, boom, it's gone. It's over the close and the high, 2 bars back, boom, it's gone. This bar, 2 bars back, boom, it's gone. This bar, 2 bars back, boom, it's gone. You understand what I'm trying to say to you? So again, this is where the 5 bounced off the 1. You know what I mean? You've got a lot of different stuff. You can see now that this bar comes back up underneath the high of 2 bars back, dumps down, and it lands on 1 and front runs the closing level of 2 bars back. It might have been a gap up level that hit in there. I'm not sure. I'm not going to look for it right now. But again, 1, 2 bars back, boom. 1, 2 bars back, closing level, boom, right? 5 off the close of 3. It keeps going. And you know, this is you can look through these points and find 2 bars back. The big crash of 70s, right? The big crash of the 1929. You know, it's not that hard to understand how you could have seen this and understood this system at that time. You know, if you'd have been able to account for it, they didn't have this system. But I mean, if you kept up with it and understood the mathematics, this is how it worked. Even when there wasn't charting, it's the values entered into a database, an accounting system, like I've been telling you. 2 bars back, we're up under it. Boom. 1931. I don't think any of us are alive today from 1931 doing no trading. So 2 bars back, structure. Boom. 2 bars back, short. Boom. 2 bars back, long. Boom. 2 bars back, long. 2 bars back, long. 2 bars back, long. Right? And then you've almost had it there, but then there's other things that you could look for. We are bar 4 inside of the upper structures of this little structure down here at the bottom of the bar 2. Isn't that right there? This right here. If I can get it to sit there on it. That's it. That's the level that I'm talking about. 2 bars back. This is a bar 4. 1, 2 bars back. 4 lands on the structures of 2. And then almost hits the opening level, but that's what did it. That structure right there, and it kept moving. So again, they went down, boom, hit the level, came up. We've got 2 bars back right here. Then you've got 2 bars back right there. It's moving along. It's getting it. These are 1980s. So we are back over, 2 bars back, boom. Over, 2 bars back, boom. This is a bull market. It does this a lot. Over the close outside of 1, boom. 2 bars back at the high level before the year 2001. 2 bars back, and then it comes up, sets that high, shorts, and then dumps down. And then we are up underneath the levels over here, and we can go ahead and mark that low if we would like to. We can, let's see, where's my open level? This is my open level. We would even say that it went below 2 bars back on the open, 2 bars back on these structures, 2 bars back underneath the little structure right there, right? So there's lots of ways that we can do this and understand what we're looking at, and then it'll make sense to you, right? Long over 2 bars back. So it just keeps happening over and over and over. And this is on a 2-week time frame, just so I can kind of get you some data in here for you guys to be able to see. We took a trip from 1875 to the year 2000 now, and then here we are bouncing off of it. And you can't tell a difference in the system, really. It's bouncing off of 2 bars back, odds and evens in all the same manners, even from 1875, and it's going to keep doing it forever. So we're over 2 bars back, boom, right? Again, this bar we've extended out. Let's see. This bar is over the close, and we broke out of the high level of this right here in bar 3. So we broke out of what was holding us down. Okay. Bar 1 set a high-low box, closed. Bar 2 rejected, shot across the range, hit 2 bars back as it came down to take out this would be like Tuesday, taking out Monday, and pulling back in. So it took out across both sides of the range, 2 bars back, boom, right? So this is again right here, 2 bars back structure, boom. It'll just keep doing this. These are mathematical facts, like it's just, you've got the close of 1, 5 is bouncing off the close of 1, 2 bars back structural levels, push through the closing level and hit these highest closing levels right here, 2 bars back. All right, 5 over 1, boom. And where are we? We are now closing bar 1 125-year bar closed. Boom. We are now free at this point to run against the previous 125-year bar if it wishes to do so. That's just how it works. So that means that if in closing level terms on 125-year bar, like if you look, say, Wednesday at the previous day's closing levels are open, high, low, close levels, and then that tells you what kind of parameters you could be working on. This is your closing level of what would be your Tuesday. This is your closing level of what would be your Monday. This right here is your previous 125-year period from 1875 to current time high. Okay. And so that means if bar 2 likes to break bar 1 and has chances of crossing ranges, it doesn't always have to do that. But it would say that the range of bar 1 in this perspective would be from this red boundary down here to this boundary here. And so our only trade levels in a really high time frame perspective like that is that's why everything went parabolic, because of this mathematical system right here. And then that's just what's causing it. It went parabolic after it settled all this time. And I hope you guys are starting to put together an understanding of how the consolidation types that can happen with the type of mathematics, and you can understand the amount of time it can consolidate. You can pay attention to that stuff and get some answers. But for now, we are the bar close right here and previous close. These are the levels, and we can run in any form against that. So it can be, it can be, it can run down, and it can run down and hit 50% of that level and then go parabolic from there if it would like to. I mean, there's really nothing to say it can't. But let's go ahead and switch over to a 250. That way you guys can see that. Okay. This is the sequence layout here. Let me go ahead and change this real quick before I continue. It's going to bother me the whole time. All right. So now we are this bar running against the other bars over here. So this is a bar, this is a bar, and this is a bar. Remember, we're low data, so it looks crazy. Nothing really looks right here in this sense, and to what would look normal on a chart that has everything that you would need to chart out the whole sequence. Okay. So even in these low sequences, it still does the same thing. We're still bouncing off of this bar right here, is bouncing off that bar over here. It's a bar 1 off of what appears to be a bar 4, which is quite all right. No big deal. Aiming at this, this odd number, could be aiming at this odd number. But if we look in here, we'll still be able to see how this bar here came up under this bar, dumped down, and this closing level here in this gap down level helps us understand the short pressure there. And then, just keeps dumping down here. You got, again, the 2-bar back long here. It'll get through this bad data in just a second, and then it'll start coming out and making more sense. So here you have the lows again, 2 bars back, creating a long. Again, over here, you have this system showing you where it's going to short, potentially, the 2 bars back, odds and evens, and it shows how it keeps doing the same sequences. 2 bars back long, 2 bars back short, 2 bars back long, 2 bars back short, different sequences. Okay. Look here, 2 bars back. Right. So you can see the sequence is working everywhere. And this bar lands on the structure. What would be the gap down in the little structures? This lands on that from 2 bars back here and starts moving along. We come up and, it's just going along up until the point it went. I showed you on the other one through 1929, all the stuff like that. You can go look a little better chart if you would like to yourself. That's completely fine. Yeah, you've got this bar here coming up, trying to hit the high of 2 bars back. It doesn't quite get there. It stops, but in the next bar, it does go up and execute. And then, so it ends up causing it to short, drops down to 2 bars back. then goes long, and then, you know, just comes on down to the bottom again there, goes long, and then we've got 2 bars back here again, goes long. And so this right here is a 250-year bar sequence, okay? So 250 years, 50 years, 10 years, 2 years. And you can see that it ended up, that it closed in the year, at the close of the year 2000 there. All right, now, if we take our 250-year sequence and we look 2 bars back, it didn't show it that it could have been that close on the 125 right there. It showed that it was a little bit off, no big deal. And then it was showing that it could have been the high of this sequence right here. But in this one, we understand that we are looking at the high of 2 bars back and the closing level of it, which, you know, you could bring across here and it front run it. So it keeps doing it. We've got a structure of 2 bars back. It goes long. Closing level, 2 bars back, we go long. We over here we've got 2 bars back. Oops, let's fix that real quick, make it look a little better there. So come on. Yeah, we see our short level there, 2 bars back. Again, we are bar 2 outside of bar 1. It's like Tuesday outside of Monday, right at the math. We already know what that boundary means. We can cross that range. Boom, 3 up under 1 dumps down, 3 comes back up over, right? So yeah, you can start to understand how, you know, the structures work, the different math works, and you can see it even worked on the 250 year bar setup coming in from, you know, what I did was I labeled this bar and I just labeled backwards, right? And just charted backwards. Just like I told you in the other video, transfer that over, understand what sequence you're transferring, and you can lay it out in reverse and forward from knowing that singular date. People ask me, why don't I use a tool? Because if I know that date, right, I can lay out any damn thing I want. I don't need a tool. I know it. I've got it mastered in my head. You can't take this away from me. You can take the screen away from me and I'll know how to write it out on a damn piece of paper. It's not a big deal. It's an understanding of the mathematical flows, right? Here we are, 5 off 1, boom, right? You see it? We have our previous high. We've got our bar 1. This previous bar high, we hit it. We put in high, put in low, hit our high from the previous bar here, came down, hit our low. We are 5 off 1. It goes long. Again, 2 bars back, high and close, boom. Right? Here we are. Current, 2 bars back, boom. That's where we are. That's what's caused every bit of this, and that's how it's working. Again, show me somebody else that can take you on a trip from 1875 to current with one simple mathematical reading key. Odds and evens, 2 bars back. Open, high, low, close. All right. Odds bounce off odds. Odds hunt the odds. Evens hunt the evens. Odds react to odds. Evens react to evens. You starting to understand here? So now when I come into this level here, even maybe right here. It's so close. It's so close. It almost touched it and executed it again right there. But, you know, it's enough to satisfy the algorithm, I guess, at that point. But yeah, that's the 250 year bar. Let's go ahead and get you guys a 375 year bar sequence understanding. All right. So in this perspective here, we can see that this is a 375 year bar layout. And if a 25 year bar is missing that much data, then don't expect a whole lot of a 75 year bar start right here. But it is working. It is still doing it. 2 bars back, boom, hits and executes to 2 bars back high. You know, we got the close of 2 bars back here. It comes down, the gap down level comes over. There is your short, the closing level. Oh, what? Come on now. What did we do here? Decided to take a trip back to current times. Okay. All right. All right. Okay. So anywho, we are back here, and you can see the gap down level came in right there, and so that's it. That's what did that, and then that bar should not be green. So 2 bars back, there's your gap level. It hit the bottom of it. Boom, it went down. Gap. Boom, from 2 bars back. If you look at this gap from right here, it's the high, the little gap. It hit it right there, basically, or really close to it. And so it's signifying, and with the other math systems and stuff, it's signifying that it's not getting a lot of upward pressure. So here we are down there. That's my long signal at the bottom. 2 bars back, executes the 2 bars up. Our let's see, that's not the thing there. It's this here, but that's not even 2 bars back. It's just within the range and taken off of 2 bars back. But you can see we came up here this high, 2 bars back. We fell back within that range. Man, if I could use my finger right, I actually cut my fingertip off a few times, and then the last time I was blowing up a racing tire, and it blew up, and it cut the whole tip of my finger off again, like halfway. So that's like 3 times I'm missing like a whole tip of that thing. And so when I touch these tools, it doesn't always work like it's supposed to. So yeah, that's why I select different things, and it messes up a lot. So yeah, fun fact: 2 bars back, dumps down. We are then back within the closing level of 2 bars back here, right? And so we start going long within that. It breaks out. Now we're starting to get our data in here. All right, let's see. We have the opening levels of this period of time, and it bounced off of it in the third section here. All right, now where we can see a little bit better here. So that's my bar one. I leave these in red for myself, but for you guys, I'm changing it to green so that you can understand, like, just kind of giving you a perspective of where you would look at long and short and stuff like that, just to kind of label it that way for you. But that tells me that this is the boundary in which I'm looking for 3 through 4 or so to execute to, right? Okay, so we've got bar right here, 2 bars back close, boom, at the level. The highs coming in right in there and hitting right in there. 2 bars back, it starts going parabolic. And now we've got low of trades. If we took and split this period of time by 5, we would see that basically it's showing a roundabouts of, it's not going to be exactly right, but potentially that this was maybe the low of the 4 seeking the 2. But in a yearly perspective, that's pretty close for what you're looking for, because you're looking for really high time frame perspective. So again, we're bar 1, bar 2, bar 3. Bar 3 crosses the range of bar 1, and then we come down to the bottom of it here, and we execute at the bottom. Now from here, we are bar 3, landing on bar 3 all the way over here. Like kind numbers, odds and evens, 2 bars back. Again, we can look at it in the previous bar, and we can look to see what levels we're landing at. So again, 1, 2, 3, 1, 2, 3, 3, and 3. Boom. This is a 375-year bar sequence, and I'm showing you how to do this from there. And these from what, 1950 or 60s and stuff right there. So yeah, I mean it's from 1870s through current. I'm not missing. Even in low data, I still had a really good idea, and you could have understood what was going on in my trading system. In this perspective down here, when this bar opens up, we get back inside of this little line down here, and that's the low of 2 bars back again. Okay, so we're back inside. So we have a 2 bars back and a 2 bars back at a like kind number in the previous bar. Boom, right? we have a bar 1 and bouncing off of a bar 3 open. Then we've got 2 bars back high, right? So 2 bars back, and then it's gone outside of this level. This right here is our long, right? So, you can see how this stuff works. You get into these higher time frames and you have less data. Then you've got to the more that you chart into the higher time frames, the more that you'll start to understand patterns and why they do things, and you can recognize them. So we've got our structure here. The bar came out green. This is our closing consolidation point here. All of our closings at the end of the bar. That right there gives us a high-low point. In our next bar, we can go bullish off of that point, right? Same thing. It happens. It's kind of like doing a low of, but if this would have been over here, it would have been your low of day, just like this. But it's the same thing. And so what's happening here is a structural trade. It just happens to be the low of. If this would have come over here, it would have looked the same way as this. It wouldn't have been any different. So mathematically, that's all you need to really understand in that perspective. Bar 4, seeking bar 2 levels over here. If I can get it on there. So bar 4 hit bar 2 on a 375-year bar sequence from 1875, might I add, before any of y'all's little gurus who's talking like they know all kind of stuff and all kind of math stuff, and they busting out all these fixed range tools and VWAPs and V whatever you want to call them. And yeah, so that's pretty much it. So that's a 75-year period here. The bar has closed. The opening level, this black line here, my major pink line here where it opened up down here in the high time frame terms. This bar closed. This is the previous closing level bars down here. This pink line, this black line down here. And then the next highest time frame closing level up is this bar right here. And if we're going to go bullish, it will probably be in this period. This is bar 1 now. So if bar 1 comes down and puts in a low, right, we've already broken the previous bar's high. So in that perspective, we have already broken and pierced the high. If we can then come up through here at some point and short below, I'm not saying it's going to, but just showing you an example of how you could be patient and understand why you could maybe short towards a level and then potentially see a long. As you've seen some very big drops in the past, and I bet everybody back in the day would have said that wasn't going to happen too. You know what I mean? Oh, that ain't going to happen, blah, blah, blah. But the fact of the matter is that right now, because we are in this bar, this can go very bearish down to these points. As you have seen in these points here, it looks like it ain't never going to stop. It ain't never going to do it. And all of a sudden, there's humongous retracements in the chart, right? So if I'm giving you an example showing you how it can go up like this and then fall off for a very long, sharp decline to points, right? These, in this perspective up here, are going to be the ones to save the market, because if it doesn't, then it's going to be seeking the previous bar close to this, or it'll be seeking in this bar here a 4, or the 3 a 3, and in this 4 it can be seeking a 2. It could seek this 4, but it's going to be pushing down lower and lower and lower at this stuff, and then that right there, that's going to be a market that everybody's going to be tore up about. You know what I mean? So if you pay attention and you look and you think about how when the year opens, the year 2001 opened, right, and closed, that's the start in smaller math, right? And in this perspective, that's the start of the new 125-year bar, and it still stays in sequence. It's not showing it like that on the 375. It would show the 125 mass as the smaller maths within it. But that's what's going on, and that's where we are right there. So that's a 125, 250, and 375-year bar sequence from 1875, right? So from 1875, I know it says 76 right there, but that's because you know, it won't let you. You go down. Let me see here, just to show you real quick. $18.75 closed. I meant that's what I was trying to say. Sorry, just trying to show you that that's the $18.75 had to close, and so $18.76 is the open. And so you can see how it's going from December of 75 straight to February of 76. And then all the data's just jacked up from there where it was missing all the data. But it still worked. And I still showed you the system and how it works. 2 bars back, odds and evens, you know, perfect, perfect stuff all the way through from 1875. You know, it's pretty awesome. So that right there should win you over. And I'm sure most of the people that don't really give a lot of attention to videos have been gone for a long time. So anybody sticking around at this point, I hope that you learned a lot through this, and I hope that you understand the potentials that the market can have at the moment. So yeah, that's all I got for you. Another flawless little victory for my system, outshining everybody else. This is Nick Champion, the mathematical great, being stupid, signing out.